I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets if they just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do.
Guys, the 16th largest bank in the country just collapsed. I mean, the Silicon Valley Bank in Silicon Valley, California just collapsed. And it wasn't a small bank, guys. This bank had $30 billion under asset management, and it just collapsed literally overnight. Guys, this is a topic that I talked about a few months ago when I told you guys to get your shit out of the bank, because these banks are falling and they're going to fall fast. Now, in today's video, I'm going to explain why this might jeopardize not only the country, but your household and your everyday finances. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I create the first cloud-based software that allows you to put your credit repair experience into your own hands. If you're new to the channel, I'm super excited because I have a banger. Today's video, we're going to talk about the collapse of these banks and how you can protect your family in these circumstances. But before we get into the channel, guys, please like and subscribe to the video. It allows YouTube to push this content to a wider audience, and also allows YouTube to push us within the algorithm and allows us to leave these lights on. Guys, please like and subscribe to the channel. If you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to mycreditapproved.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to mycreditapproved.com, check out the software, and start removing these items, guys, if you have anything derogatory on your credit report. Now, let's dive straight into the meat and potatoes of this video. Now, this video is interesting because it is something that I've been talking on this channel for almost a year now, guys. I've seen the liquidity crisis in these markets falling for quite some time, and now the dominoes are falling. Now, I'm not the type of person to say I told you so, but
You ain't telling me shit.
I told you so, guys. This is going to be a serious issue for the country, and if you are not prepared, it can be a serious issue for you as well. So let's dive straight in. So the Silicon Valley Bank is a bank primarily for Silicon Valley or startup companies. Now, Silicon Valley is a company that's known for having large tech companies in its community, like Twitter, Google, Facebook was there. So it's a lot of companies that's in the tech world that's in Silicon Valley, and a lot of startup companies invest or hold their assets inside of that bank, and a lot of those assets are not insured. Now, the FDIC came in a few days ago and basically shut the doors because they were exposed, Silicon Valley was exposing too much risk for their asset portfolios within the bank. Now, as you probably know, the FDIC is the insurer that basically insure all of your assets, all of your money that goes inside of your bank. So every dollar you put inside of a bank, the FDIC is the company that insures. Now, the first thing that you want to make sure of right now is that your bank is FDIC insured, because if it's not FDIC insured, then if they are doing the same practices that a lot of these banks are doing, then you could be extreme risk. Now, the issue with Silicon Valley Bank is because Silicon Valley had a large portion of customers having large balances. Now, the FDIC only insure up to $250,000 per account or per bank. So if you have $1 million in one particular account and something happened to the bank where the bank go bankrupt, the FDIC is only going to insure up to $250,000. So the other $750,000 that you lost is lost. So that's why a lot of people do not like to put, especially rich individuals, don't like to put a lot of money into one particular account because it overlaps the risk that have to keep the accounts involved. So if you have a large portion of money, you want to be able to separate it so you can have the insurance backed for each individual dollar. Now, that's probably hard. The more money you make, the more money you're going to have to separate. But like I said, the first thing that you want to do is make sure that your bank right now is FDIC insured. Now, like I said, the Silicon Valley Bank customers had an average of over $250,000 inside of the bank. So that means that majority of the customers had more money in the bank that the bank actually insured. So it's going to be a lot of traffic when it comes to this individual topic. Now, I'm really interested to see how this spill over into the next week, because a lot of individuals are getting these headlines and it's going to frighten a lot of people. Now, I've seen a video regarding the FDIC a couple weeks ago, and where they were talking about how if all of the banks basically crash, the FDIC only have enough liquidity, enough money to insure 3% of the policies that they have open. So if over 3% of people need to be insured by the FDIC, that market would crash as well, along with the banking market as well. So guys, this is basically frightening times because the economy is going in a very strange direction. I predicted this a couple months ago because I'm seeing the liquidity crisis that a lot of these institutions are putting themselves into. So basically, to give you a rundown on why this is happening, when you deposit $10 into the bank do not keep your $10 inside the bank. The bank take that $10 and invest that $10, or they loan that $10 out for an interest rate. Now, what happens when all the markets go red and they invest your $10 into a market that loses money? What happened to your $10? Your $10 doesn't exist anymore because they took your $10 and put it in a market where the market is not doing well, or the market flopped, and now your $10 is going down with the market. So that's basically what we're dealing with these banks in terms of the liquidity crisis. We're dealing with a problem where these banks are taking a large percentage, if not all, of the deposits and investing them into markets, and now the whole global economy is doing bad and these markets are doing terrible, and all of the liquidity that they invested inside of these markets are going tanked with it. And now that the FDIC is coming to the cow's home, the banks don't have the money to supply the capital for these accounts. So what's this going to happen? This is going to basically trigger a bank run on not just the Silicon Valley Bank, but probably your bank as well. And when that happens, it will make the banks insolvent towards these issues and ultimately probably make the banks go belly up. And if that is the case, guys, you need to protect your assets as much as possible. Like I said, videos in the past, try to split the assets in different accounts and try to have as much cash as possible. I wouldn't recommend you going and trying to take all the money out all at one time. Try to make it a trickling effect. Try to move some from here, cash up, take some out, ATM, and basically put it in a place where you feel the safest. Any guess is better than the other one because no one knows where these institutions are going, how big this problem goes. So guys, yes, let me know in the comments how you feel about this. Do you feel like this is an issue that you're going to deal with? Are you dealing with this issue with your bank now? How do you feel about the exposure risks when it comes to your assets within your current bank? Guys, let me know in the comments how you feel about this. And like I said, always, guys, protect your credit and protect yourself. Guys, stay tuned.